top section is his long-term care policy, and the bottom one is his wife's long-term care policy. Your title roll on the side, then you have what the current policy is, and then you'll have 1, 2, 3, 4, 5, 6 boxes, and those are options 1, 2, 3, 4, 5, 6.
So, like, look at the top one, which is current. His benefit at this point is $22.68.87 a month. He has a 3% compounding inflation rider, which means his benefit goes up by 3% every year. And they have a 90-day elimination period, but that doesn't count. That only counts if you have facility care. If you're at home care, it pays day one. And he's got a 2-year benefit. And the total lifetime benefit is $54,452.88. And he's paying $994.80 a month, a year for it, okay? So here's what they're offering him. His first choice, he gets his monthly benefit the same, but what they're always trying to do, all the offers are trying to get him to pull that inflation rider, because the benefit is going up every single year with his premium thing. So you can see the second offer, the first where it says enhanced, reduced, paid up, he keeps the same monthly benefit, but his inflation rider goes away, and the lifetime total goes from $54,452 to $15,051. So now they got less than one third of the liability.
The total lifetime benefit, does that mean that's as much money as they can get out of this policy when it's done, it's done?
Yes, yes. There's one. Since he's married, on just his, not counting his wife, that's it. He can get his benefit is $54,452.88.
So if he goes in the home,
but that goes up. That'll continue to go up, though.
Right, but if he goes in the home, is in there for 6 months, and he runs out of that $54,000, the policy's done.
Yeah. It'll pay until he runs out of that money.
He's 75 years old. He does have heart issues. He's been in the hospital, back out. So chances of him needing long-term care might be slim, because he'll probably just die. In all reality.
Yeah. Well, you got to remember also the benefit period on his is 2 years.
Mm-hmm.
So it's the way it works is either it's 2 years or $54,452.88, whichever is larger. It's going to pay that amount out, no matter what. So, but then the second choice where it says where they get the $10,000, well, then it's got a $2,268.87 monthly benefit. I think it's only going to pay for a very short amount of time.
Up to $34.52.
Yeah, because the total lifetime benefit at that point is $34.52. And then you got the other choice. Then the next one, remove inflation, revert original monthly maximum. So he then is going to go. He started off with a $1,500 monthly benefit.
Mm-hmm.
So they want to move him back to $1,500. And then it would pay out $36,000, and his benefit is they're trying to reduce either his maximum benefit or take away his inflation rider completely is what they're trying to do.
Right.
And
that option actually might not be that bad for him to get a $6,000 check. He's back to $1,500. I'm just saying it might not be.
Look at the difference. Here's the deal. What I tell them, I tell them if they can afford to continue paying their existing premium, when they're going up, to do it. Because most of them are in their mid-70s.
Yeah.
They're more likely to need it %.
And this is an annual premium,
right? Right.
Mm-hmm. So basically, when you look at it, if you just divide it across 12 and then just take that amount out of the monthly benefit.
And here's the way that the long-term care works.
Yeah.
Also, the other argument a lot of times the client will make is, especially the husband will make this argument, he'll say, well, what if I pay all this premium and I die? And I never use it. Well, the way it works is your spouse inherits, she no longer has to pay the premium anymore.
Right.
And she gets full benefit. Well, let's say he uses up all his 2 years benefit. He can use up to 80% of her benefit. 80 or 90% of her benefit. And she still gets 50% of her benefit. So even if he uses up his $54,000, he can use up to another $60,000 of hers.
Now, do these impact their Social Security or anything like that?
And if you're self-employed, The premiums are tax deductible.
Yeah.
I have one.
Yeah.
I bought a long-term care policy several years ago, back when I was in my 40s, because my family has a history of Alzheimer's.
Right.
So
he retired from the state. So
the state doesn't offer it.
State doesn't offer it, but wouldn't your normal medical benefits cover most of the things?
No. That's a common question. No, long-term care pays mainly for custodial care. They'll pay, someone will come in the house. First of all, the way the policy works is they get 2 months benefit up front.
You'll see it says 90 days, zero home.
Yeah.
What does that mean?
Zero, that means you pay no elimination period. It pays zero, there's 0 days elimination period. It pays the benefit day one if you stay at home. But they'll pay 2 months benefit up front to widen doors, put in ramps, buy beds, or whatever things you need. And then they pay somebody to come to your house. I have a lady right now that's on complaining. She's got bone cancer. And they pay for her. She's got one of those devices that where she can't get up the stairs anymore. She just rides up the stairs. They pay for that. There's a lady in our house cooking her meals, doing everything. She does the shopping, cooking, keeps the house clean, all that.
Yeah.
For her. So it's a great. I was one of the top producers of long-term care for many years.
Now there's one down here.
But the key, what happened is just Genworth had been in business doing this since the 70s. What are y'all talking about?
Well, if we look at the fifth choice, reduce monthly max by 25%, you get a $1,200 check sent to you. You still keep the 3% comp.
But you're giving back $14,000 benefit.
Yeah, you're losing $14,000.
Yeah, and
And your premium's only going down $200.
Yeah, a year.
Mm-hmm.
That's why it comes down to if the client can pay it.
Well, one of the weird things about this is it says here, as you evaluate these choices, please be aware that as of 8/6/23, we plan to seek cumulative rate increases of approximately, number one, 154% on policies with lifetime benefits and an inflation benefit.
No one has, hardly anybody has a lifetime.
Other than 1% compound. Number two, approximately 28% on policies with lifetime benefits and 1% compound or no inflation benefit. And number three, approximately 69% policies with limited benefits and an inflation benefit other than 1%. So the prices are going to go up. They have gone up.
Yeah, they will. But that's one of the reasons they're having. But one of the reasons they're having these lawsuits against them is because, like I said, they've been writing these policies since the 70s. When I initially sat on my clients, the thing I said to a lot of my clients in the early years is they've never raised. When they signed up for long-term care, they had to sign a waiver saying that they understood that their premiums could go up. But up until the point when I was dealing with them, they had never raised the rates.
They're trying to push people out.
And I told them, I said, you have to sign this, but they've never raised the rates. But what happened is, there's two things that happened that killed long-term care. One, that group that was buying those policies, they're living way longer than anybody anticipated.
Right.
Okay, so they're on claim for a longer period of time. Originally, most people, when they got a claim, they'd be on it for 2 years and die. Not anymore. Medicine has kept to figure out how to keep them alive. Right? I got a client on it right now that's had stage 4 cancer for probably 8 years now. This lady that's on claim right now, she's had bone cancer for at least a year. When we were kids, bone cancer, you didn't live.
No, you're gone.
You're gone.
You're gone.
Yeah. So I think it's because of that that it's put a strain on their claims. The amount of time they're paying and the amount of money they're paying in claims is way higher than they anticipated.
Okay, let's look at that, because my mom was kind of in that situation. When we moved her into assisted living, because she did not want, she wanted to live by herself, okay? She moved into assisted living. It was like $2,000 a month. But within 6 months, unfortunately, dementia got her. We had to move her into memory care. And she was at $4,500 a month in climbing.
Yeah. Wow. Yeah, I've seen people pay $8,000 a month.
Yeah, and then like what Mike talked about his earlier, but let's say if her care was $6,000 a month, and she had this lifetime premium of $54,000 and change, less than 10 months, that policy's done, right?
Right.
Okay?
But $54,000 is paid out. It's
Right.
$54,000 doesn't come out of your investments.
Right.
Right. And so you say, is it the question? One of the things I would always point out when I was signing my clients up for these policies back in the day,
Right.
I could show them that historically, the amount of payment money that they paid into the premium, even if they had kept it, even if they had 10, 20 years before they even started paying a benefit,
Right.
it would take them less than a year, 6 months to a year,
Recoup that.
to recoup every bit of the premium they paid in.
Yeah.
For like a 5-year benefit program. So you can't lose. And then evidently I was right the whole time. And the company's losing is what's happening.
Right.
And
Because evidently they're not keeping up with inflation. The companies that issued these policies,
generally,
their clients were outliving their actuarial payments.
way under. And that's why they're having a class action lawsuit, like I said, because they said they weren't going to raise rates, they had to raise rates, and now they raise the rates dramatically every year.
Right.
And I get these calls from my clients all the time. But the good news is nearly all the clients I have that had the long-term care policy have a substantial amount of money in their investments.
Right.
So we can cover it. So for me to increase their pay by another $100 a month is no big deal.
Right.
The third line, if paid up, you get the $10,000 in cash. Your monthly benefit is $2,500, but your total lifetime. So you're saying, so by that sheet right there, if he went and had any two of the 7 active of daily living,
Or that's kind of the same.
2 of the 6, whatever, he would only get $34.52, period.
Yeah, because he already got his 10,000.
He got his 10,000 out.
That's a bad deal.
Yeah.
That's what I tell them. Stick with what you signed up for. And they don't. I'm sure Genworth would like that
Right.
because they're trying to shed as many policies. I'm sure there's a lot of takers.
Yeah.
I bet you there are a lot of takers saying, you know what, I'll take the 10,000.
10,000.
So the 10,000 is kind of the carrot.
Yeah, it is. It's clear. Yeah.
Yeah.
They're excited to see that they're more than happy to write a $10,000 check.
Yeah.
After learning this.
Because the stick comes with the annual life benefit, or lifetime benefit or whatever. I mean, that hurts.
Yeah.
But I mean, you can see.
And if you calculate how much they paid into this policy,
Right.
they're still losing.
Yeah.
They stick with it, they're going to make.
Yeah.
And you can see her policy down there. Her annual lifetime is $120,000.
Yeah.
Because that's the combined of the two.
Of the combined of the two.
What, his 54?
No, it is not.
It's not?
Mm-hmm. See, her benefit is $25,0786. She's got a 4-year benefit period. That's why hers is twice as much. So no, that's separate. So that the Genworth is in for them for around $175,000, and they love shit that.
But you said he could get half of hers.
No, I'm sorry. He gets up to 80% of her.
80% of her.
So he could get up to whatever 80% of $96,000 of benefit on top of the $54,000, and then if he died after that, she still gets $60,000 of benefits. So they're into it for even more money. So because that was the spousal rider, and once you start, if you had a spouse, like I said, once a spouse started drawing a benefit, they no longer had to pay the premium. So now they're really screwed because if he goes into benefit claim and he dies later, 2 years later, she now has this $120,000 in benefit for free for the rest of her life. Now they can't even send her a letter. So they're in a bad spot. But if you're going to issue a contract, which is what they did, they got to honor it. I won a number of awards on trips and stuff just for selling. That's how I got to go to Hawaii the first time. Just selling long-term care policies. I always thought it was a good product because I was presented it because it helped my clients not have to spend money, spend down their assets.
Well, you bought it too. You have a policy, don't you?
Yeah, I did. I have a 10-year benefit. I have a 10-year benefit period with a 5% inflation rate on it. And I bought it in my 40s. So They're gonna owe me a call money.
So you should have gotten a letter.
I'm sure I did. And like I said, it's tax deductible to me. It's one of the few things you can deduct up income tax.
Yeah. Well, I mean,
So every time I had a business owner,
yeah.
I present long-term care policy. I said,
Yeah, but
you're looking for tax deductions, there's one.
But really, any insurance for a business is deductible for the business.
Most of it is,
Yeah.
yeah.
I mean,
But on long-term care, you can discriminate.
yeah,
Whereas other companies, you can't.
yeah,
But long-term care, you can't.
yeah.
You can only offer to whoever you wanted to offer to. On social media, not the advancement, all of it is what I was telling you.
Oh, you can get your money after not paying the taxes and we.
That's right, so you don't pay taxes on the loss. You're not gonna change the tax laws just to give you a benefit for life insurance. Now, I will tell you, I've gone ahead about a little over 6 million invested with me. And most of it is in non-qualified money, not IRA money.
Right.
And he was calling me, he's worried that someone could try to sue him and get his money. So he said, well, how can I protect my money against lawsuits? And I said, let me check into that. And when I got him, he had $500,000 in cash value. Not life insurance, in cash value.
Yeah.
So I had done a 1035 exchange of all his cash value into variable annuity. And he's making way more money from that than he ever did in his life insurance. And it turns out, I did some research, and I called some of the attorneys at home office and all this, that Texas and Florida has a additional protection from creditors in life insurance cash value and variable annuities, in any kind of annuity. So it's nearly impossible to collect on a lawsuit, or any creditor can collect from you if you have whatever money you have, either in annuity or in cash value.
In those two states.
In Texas or Florida.
Can you do it?
But a trust is another way.
Yeah. I'll take
In an LLC.
Can you do an umbrella policy? Is that?
Yeah, and that's what I have too. I told him, but the problem is, he said, the most my insurance company will sell me is $5 million in umbrella protection. And that's all I can get too. So most of them don't want to go over that.
They can't sue the retirement money.
Mm-hmm.
They can't sue an annuity.
It's hard to say, especially in Florida or Texas. You can't do it in Georgia.
But if you just have
they can
non-qualified money, they can get your non-qualified money.
They can try to.
Right.
But see, I did get sued in 2005 for a car accident, and I didn't have the coverage, and I was able to get out of it. But from then on, that's what made me start caring. I realized once you start having money, because when you're poor, you don't really think of these things.
Right.
What are you going to sue? What are you going to get? They can try to sue you. If you understood the rules, there was no reason that lady should ever try to be able to get anything. No, let me tell you this. Let me tell you a rule that's not even admissible in court.
Yeah.
She had good health insurance.
Mhm.
Her health insurance paid for all of her care, completely rehabilitated her.
Yeah.
But when we went to court, that wasn't inadmissible.
Yeah.
That she had the coverage, that all her medical bills, they were claiming as if none of her medical bills were paid.
Right.
That was not true. They were all paid. She was trying to get after me for $500,000.
My daughter, separate from mine. It's not connected because kids are on the phones, kids are doing this crazy stuff, and they get in a wreck. You're still liable. So I preach that, and I had a lot of friends take that advice. They got their kids off their joint policy and paid for their separate policies because you don't want them to have them connected to that.
Right.
When I was getting sued, I had financed. I had to take advantage of his. The only reason I beat him is I knew more about finance than my attorney did. But that helped me. That helped me a lot. But one of the things, he had seen that I had 100 acres in Upson County.
Right.
He thought I owned it free and clear because the organization I did my financing on my property was Ag South. But Ag South doesn't report to the credit agencies. So it looks as if I owned it out free and clear. He had in his mind, I know it because I looked at his background. He's a big hunter and all this other stuff. He had in his mind he was going to end up with my 100 acres. So I worked my tail off to beat his butt, and I did. But he realized way too late in the game that he wasn't going to get it.
And the thing you gotta worry about, even though you have an umbrella player, I'm not scared of anybody, but you gotta think, you got $1 million policy. Your daughter hits somebody, becomes a paraplegic for the rest of their life. They're not only gonna get $1 million, but they're gonna go after $5 million because it's gonna have to be something for the rest of his life.
Right.
So your umbrella policy will cover $1 million, you're gonna have to come up with the other 4 or 5 or 6 or whatever it is. So it can only protect you for so much.
Right. And the other thing, even though here's why I hate the $5 million, even the $5 million. All it does, it gives them, this is a big chunk of money they know they're going to get without even having to go to court, right?
Yes.
They know they're going to get $5 million without even trying.
Yep.
So guess what? They're going to ask, how much do you think they're asking for? Oh, it's going to be a massive $5 million, right?
Just like I said, had I had $1 million policy, they would have just gotten $1 million. But since I didn't have nothing, they didn't go digging into my money or anything like that. I hid some money and did some things.
Right.
But
and right, so
Well, my dad was in a motorcycle wreck, and the lady came out to get him, and it put him in ICU. It graded for a month. He almost died. He couldn't still nothing.
right,
Yeah, nothing.
had she had $1 million policy, you would have got $1 million.
and if she did have a successful business, he would have been able to get a bunch of money. You have something, and that was an eye-opener for me. When you start having assets, you need to protect those
It's
assets.
probably cheaper to put her on her own policy than to have your umbrella policy.
What I can do is, I can get you probably a little bit more coverage than what they're giving you, and we can invest the rest.
Right. Because every year it goes up per 1,000.
Yeah.
But your premiums are the same.
As your cash value goes up, your insurance coverage goes down. So what are you really getting? Okay, well, you got $100,000 in your shoebox in 1990, but this is 2023. The buying power of that $100 is gone. You're at 72.
I was telling you, you're buying two things, but you only get one.
Yeah, you only get one.
Yes, you're buying savings and insurance.
Yeah.
But you get one or two.
Yeah. But it's a tax-free benefit for my beneficiary. They won't have a tax problem.
Absolutely, that's how it's sad. The money's already been taxed.
Yeah.
But that kind of crap happens all the time.
Yeah.
And it's all about the commissions. And that's what I tell them. I said, one of the first things I tell a client when they ask me about it, I said, I wish it was good because I get paid way more money.
Yeah.
But it's not. Only the guys that selling to you, they get paid 5 times what I get paid on the policy. Because they get paid, how whole life works, they get paid 55% up front, and then they get 5% rider for the next 9 years.
Yeah.
So they get 100% of the premium. But it's because it's very profitable. It's a very profitable product. State Farm makes their agents, puts them on a quota. They have to sell 4 a month. They tried to cancel my father-in-law. He had a State Farm policy for over 30 years, and he was in an accident in Thomaston a couple years ago. Had never had a claim, but the lady didn't have her. It was like December. She didn't have her headlights on, so he slammed into her because it was dark at 6 o'clock. Right, you can't see anybody. She didn't have her headlights on, so they tried to cancel his policy.
I've had Snake Farm for so long, they actually sent me a letter, like 10 years ago, that said they can never cancel me.
Right.
Oh, they can't cancel me for good. If I have insurance with them and I file a claim or something, they can't cancel me.
As far as the car insurance is concerned,
Yeah.
they pay their claims, as I understand it, and I have lots of clients that have a good rate.
Right.
So, but it's not what I'm talking about. Their main issue is if you buy life insurance.
Right.
That's where,
Yeah.
same thing. I've had USAA insurance since 1983.
Yeah.
Long time. But they sell jacked up variable and universal life insurance to their clients.
Yeah.
Okay. So the car insurance and the homeowners insurance thing is one thing. It's the life insurance is
I agree 100 billion %.
yeah. The rules changed in 2008 and 9 when the whole economy went to the toilet.
Right.
That's when the rules got really enforced. Up until that point, they were backed, but they weren't backed like they are now.
Okay.
That's why the variable annuity companies. That's why the old PE4s that we were selling back in the day, you can't sell them anymore because Bright House can't make money on them because in 2008 and 9, they made them double the amount of money that backed the monies they had on the books.
Oh, okay.
So that makes it automatically less profitable.
Right. So the monies that are held in reserve,
And they have to be 30-year treasuries.
30-year treasury.
Yeah.
Okay.
And up until last year, they were paying nearly no money.
Correct.
So now they're actually paying a decent amount.
4 point something?
Yeah.
Yeah, 4 point something.
But before that, they were paying 1.
Yes.
Very low rates for a long time, and they were taking all this, and so it really killed. That's why we had the 5-year. You know, the Genworth, the old Bright House. It was actually MetLife. You got to pick any investments you wanted.
Right.
In your variable annuity. 100% of your money in variable annuity went to an investment.
Yeah.
And you had, and the investment choices were inexpensive. Now, nearly all the products were about 18 to 20% has to be in cash.
Right.
And then only 80% is invested.
Right.
In other stuff. And then the underlying cost of the investments in the new contracts are higher.
Right.
And the underlying cost of the actual contract is higher. So you're giving up. I always tell my clients, you put your clients in, I said, when I put my clients in a variable annuity, I'll say, if you have a fund that makes 12%, if it's in the annuity, you're only going to make 10.
Right.
So they're going to give it 2% of your return just to have it in the annuity. But if you want to guarantee,
and that's what they always say.
yeah. So I was
I
telling
want to guarantee.
if you want to guarantee, I was telling them, guarantee, there's no such thing as a free guarantee.
Yeah, you got to pay for it.
So you're going to pay 2%. If you don't mind paying 2% for a guarantee, that's what you would get. And some want the guarantee enough that they'll pay the 2%.
Well, that's what I see in a lot of older people that I've talked to over the last 2 months. Bill, if we can't get a guarantee, then it's not worth our time. You see your point of view, but you may want to do a little bit more research.
Right, because there's no product out there that has a guarantee.
Yep.
That, well, like, let's look at CDs. Okay.
Yep.
CDs have FDIC.
Yep.
Up to $250,000 coverage.
Yeah, $250,000.
Right. Now, the deal is the bank has 20 years to pay your money back to you,
Yeah.
and then I have to pay one-time interest.
Right.
There's 87 cents backing every $100 in the bank. So there's not really enough. So if your bank did go into receivership, it could take you a while to get your money back. Okay.
No,
But again,
if you are,
but the bank though, the bank, if they have give $100,000 in the bank, they can loan out between 800,000 and $1 million.
Right.
100,000 you have in a deposit.
Right.
So that's where they make their money.
Yeah.
So you're paying for that guarantee.
Right.
And then any kind of annuity contract, they always have really high expenses. You're paying for it.
Yeah.
So I that's why when I was on that trip to Florida, one of the head honchos with Bright House, who I like, Jason Moore, great guy, super nice guy, and he's always counting some of these different variable annuity products they have. And I told him, I said, I'll tell you where I'm putting my clients right now. I'm putting my clients in the floating rate fund. They're getting a 9.85 yield, and it's liquid.
Yeah.
I can have it out tomorrow. They're not locked up in it for 7 years.
Right.
I said, yeah, they get 9.85%. It's liquid.
Yeah.
Why would I do that? Why would I put the money in a variable annuity instead of and to get 6 or 7% when they could get 9.85 and still have liquid?
Yeah.
Because it'd be tax-free in the annuity, this is not tax-free.
Any money he makes pulls out of that that annuity is taxed as ordinary income. The money he takes out of the mutual fund is taxed either calculated in dividends.
Right.
Right.
Until you hit the cost basis, guess what? They ain't paying anything.
Right.
So that's how I'm trying to reduce my income by having the tax-free munis
Right.
funds, because I'm getting paid on that, but it's not towards income tax.
That's correct.
Yeah.
So I'm trying to lower my tax burden now.
Let's say you have a client. Let's say this client put $100,000 in a variable annuity, a non-qualified variable annuity, and it normally takes 7 or 8 years before it comes out of its surrender period. So now let's say that money's worth $150,000. The problem you have, if you don't keep it in a variable annuity, then that whole $50,000 they're up is going to be taxed as ordinary income. So the sad thing is, if you have a client that have money in an annuity product, it's nearly impossible to keep it to take it out of an annuity product. In a non-qualified annuity, because if it was qualified annuity, let's say they had money in an IRA annuity, same 100,000, now it's worth 50,000. Well, they can transfer that $150,000 out of that IRA annuity into an IRA mutual fund. No difference in taxation. The problem is if it's a non-qualified money, now now worth 50,000 taxes as ordinary income before it can go back in the mutual fund. That's not good. So your clients are stuck with money. So the 50,000 you make would be taxed as ordinary income. So they're stuck unless they want to pay 15 grand in taxes.
Yeah.
Or 20 grand in taxes. They're gonna have to keep the money in a variable annuity.
But qualified, they roll it into a rollover IRA.
No big deal.
They can pull 3 grand off a month, whatever they want to do.
No big deal. That's so you spoil the money put in non-qualified money that's put in a variable annuity is spoiled really. You can't put it anywhere else.
Yeah.
You know, we have several choices. We have the one I use the most right now is AIG, which is now Corbridge.
Yeah.
I'll change things. But Corbridge, the reason I like theirs pays no less than 5% a year guarantee, but it has a daily benefit rider.
Right.
Okay, which I like, because actually I have some clients that are coming out ahead on that, because back in 2021, the market went through really high, right?
Yep.
So their accounts are up here,
Yep.
and it's locked in at that number. And then 2022, the market went down 22%, but they're still drawing money off this number.
Right.
So
Yeah.
I like that product.
Yeah.
Now, one of the things I'll do sometime, how I do, if I have a client that has variable annuities in a mutual funds, what I'll do is, and this is what I tell them when we set it up, I say, if we have a good year and the market's doing great, we're going to take a larger percentage of money from the mutual fund. But if we have a bad year like 2022, then we'll reduce what we're taking from your mutual funds and start taking a larger amount of money from your variable annuities.
But you can start having them withdraw a monthly stipend from that annuity, and then take that monthly money and invest it into something outside. Instead of taking the whole thing and getting that tax burden of 50 grand up front, have them start whittling it down.
And isn't it better, using Mike's analogy, even if they stay with company A, isn't it better for us to go ahead and tap that money and run it out? If they're eligible, go ahead and start taking the money out and keep running it out until the day they die.
Yeah.
And make because the only way you're going to outlive an annuity is outlive the actuarial thing.
Well, but we never annuitize an annuity here.
Right.
So, yeah, do y'all know the difference? Annuitization and withdrawal?
Yeah. But some people, unfortunately, allow that to happen. So I'm going to say that real quick.
Right.
And Sam doesn't want to go down. Sam does not want to annuitize you.
No.
You just want to start pulling money out of that monthly.
Yeah, making a distribution. Right. Yeah.
Because an annuity is very similar to like a pension.
Yep.
Okay. It pays the benefit for as long as that person's alive.
Mm-hmm.
But once they pass away, that benefit goes away.
Yeah.
Whereas if you have a withdrawal, and you take a monthly check off it, and you pass away, whatever money's left over in the account goes to your family beneficiary. So that's why you never want to annuitize an annuity.
Yeah, and that's the hard part about getting people to understand about their pensions. Some places allow you to move it out. Some places would make it hard for you. But as soon as it's annuitized, you're stuck.
Well, I have a client of mine trying to roll $273,000 out of Equitable.
Mm-hmm.
We have made 3 attempts.
Yeah.
Finally, and I was working. They do not make it easy. I would never have a job. I couldn't have a job. I make 4 times more than anybody's willing to pay, and I work 20 hours a week. Let me tell you, that's the choice everyone makes. If you don't mind working for them, then you're fine. But I personally, even when I was in the military, I hated it. I was always the hardest worker, and even though I was the hardest worker, I got paid the exact same amount as pension. And I always like being the hardest worker, get paid for what I did. And at the end, another reason I do this is I make a complete difference for my clients. I change their lives forever. when I first got to Primerica in 1991, I'd been a stockbroker. I was broke. I was broke. So broke I couldn't pay attention. But here's what happened, is when I became a stockbroker, late 87, got a license. First firm I worked for did training. When I got my license, I remember I walked in the office the next day. They said, there's your desk, there's the phone, there's your phone book, go to work. I had no clue as to what I was even doing. Because I just took a test. I did not, just because you know how to pass the security test doesn't mean I know how to do security. So I happened to be working right next to a guy at that first firm that's uncle owned a firm at one point. So me and him got to be friends. He introduced me to his uncle. His uncle got me in with another firm where he actually took me under his wing for a number of years. And I went from making zero, and I remember the first month I made $3,000, next month I made $4,000, and then I made $10,000. I never made less than $10,000. And this is what, late 80s and early 90s. That was even a lot more money than it is today. So, but at the same time, what happened is I went from, and I had no clue about anything. I did not address. I'd walk in the office, and the guy would say, Hoffman, what are you wearing? And I'd be wearing some old wrinkled polyester shirt and this and that, with a cloth tie, with a belt, whatever. And so he started trying to teach me how to dress and all that. And so I started doing pretty well. And I started figuring it out. And I started becoming successful. But I got in with Primerica. And so I spent all my money as a stockbroker, because when you're 23 years old and you never had any money, and in that environment, your bosses want to keep you in debt, because if you're in debt, then you work hard. So that's how they do it. And so I was broke by the time I got to Primerica. And I got married in June to Stacy, and I started Primerica in September, exactly 3 months later. So I got here, I was working part-time jobs and things like that while I was at Primerica. But I was working, I was doing 8 to 10 appointments every week. I was putting my head down. I was working 12, 14-hour days every day. And I did that. And at first, life was not heaven at home, because I was work. I was going to church, and all the people at First Baptist, at the Baptist church we were going to, and all the people we were going to church with were bankers and real estate agents, stuff like this. My wife, I said, well, how is it they have all this stuff and we don't have any of this stuff? And she's kind of putting pressure on me, because I was barely making. Because the first year I got to Primerica, I was only here from September to the end of the year. I made like $2,500 while there. Then I made a little bit more money the year after that. It took me 8 years before I was making $100,000 a year. Now, the reason it took me as long as it did is my R&D wasn't very good. The guy that I had trained me really didn't know what he was doing. And so I basically had to figure it out myself. And so whenever you have to figure out something yourself, you make piles of mistakes, which I was willing to do. So every time I went on an appointment, one of the things I did is when I got done with the appointment, I'd ask myself on the way back to the appointment, okay, what did I do that was good? What did I do that was right? What are some things I need to improve? Right? So I did that. And then I went to a number of Tom Hopkins seminars, which is sales training seminars. And that helped me too. So every year I was getting better and better and better and better. My income was going up every year, and I started figuring it out. And the reason I worked as hard as I did, and the reason I still work as hard as I do, and I still do what I do, is I believe that what I do is basically the ministry. This is what I'm good at. I'm good at teaching people how money works. If I don't see them, the way I look at this business, as a matter of fact, the thing I would say to my wife every time I left the house to go on an appointment is I would say, I'm off to save Middle America. That would be my, and I still believe that. No one knows how to manage your money. And there's no other company out there helping their clients do it. And so I was willing to go through the pain, a number of years of pain, with my head down, working hard. I was never the one. Let me tell you, when I was hired at Primerica, there were 3 or 4 other guys that everybody seemed to think were going to win before I was. But I didn't let that bother me. They had already picked their horse. That didn't matter to me. No one was going to stop me. No one was going to stop me. So I put my head down and I went to work. And I went to work and I worked and worked and worked. Well, let me tell you, that's the great equalizer. Okay, hard work will beat anybody else. It will beat talent all day long. The key is to this business. The reason I'm here is, number one, as an agent, y'all are learning stuff in here and about what that we talk about that will help you, about how money works, annuities, life insurance, but the biggest thing is if you can to learn something is good, but to teach it is better. And so what our job is, and that's why I always tell the people I've met for the very first time, I said, my job is not to say anything. My job is to teach you. Because the reason, and the more you understand about the stuff, the better decisions you're going to make. So my job is to make sure you understand it so you can make informed decisions about money and not just be sold something. And that's why I get as many. My closing, if I go on 10 appointments, it's rare for me not to get a client. Out of 10, I'm only going to get 10, maybe 8 if it's a bad day. And then they ask me, well, how many trips have you been on? It's at least 50, probably closer to 60. The Primerica sent me at least 50 trips, pay for everything. They have given me hundreds of thousands of dollars of stock. You know, they've taught me how to manage my money and help others manage their money. And because I have helped other people manage their money well, I get paid before anything happens. I get $20,000 a month, 25,000, 20 to 25,000 a month. And here's the good news: that number's only going to get bigger because the rule of 72. I figure if I don't do anything but do what I'm doing now, my assets under management will double by the time I'm at least double by the time I'm 65. So that means I'll be making, if I do anything different, I'll be making $50,000 a month before anything happens. I was able to send all my kids through college with no student debt. I have this building. I'm able to teach martial arts and charge less than anybody else is willing to charge to teach martial arts to kids. And I do that as an administrator too, because I think it's good to teach kids how to be, number one, get off the phones and off the computers, do something physical, to learn how to have more balance and strength, and mental toughness, and all the stuff that goes along with martial arts, right? So I teach them, I look at that, I don't make any money from that, it costs me money to teach them, right? But I'm able to do it. And all because I was willing to put my head down and go to work for about 8 years. But a lot of people get allured to go in different directions. Because let me tell you, going in a different direction and working a job where is an easier choice. Because in a job you don't have to produce anything,
Right.
and you still get paid.
Right.
Okay, but you will always be paid way less. What I looked at in my life, to me, is I want to change my family tree. I've already changed the way my family, from where I started, living in a trailer park, okay, in Texas, with no air conditioning ever in Texas, okay, and no one in my family ever graduated college, to all 3 of my kids have already got degrees. It's night and day. Owning 100 acres, all this stuff, it completely changed my family tree. But and here's the other thing, I have lots of clients that I've changed their family tree too. That's rewarding. I can't tell you how many times I've had organizations try to hire me. By the time I got off the phone with them, they wanted to come work with me. They were getting paid less than I was. So I like that I have freedom. I like that I have, and I get to do, I'd be glad to sit down with y'all and teach you, number one, help your husband pick out his 401k choices. And go through and make sure you are on track. I said, how much are you going to get from Social Security? We have no idea. They're nice people. They just have no clue about finances. And what's exciting to me is I give my clients hope. 57. He's 2 years younger. When he first sat down, I said, when do you want to retire? He said, I've come to the conclusion I'll never be able to retire. That's what, I get that sentence a lot. Okay. So when I got done with him, I had my calculator, I did my calculations. By the time he left, I said, he's 57. I said, you won't be able to retire at 65, but you will be able to retire at 7. And you'll be able to be, and if you do this, 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 and this, you'll be able to hit your numbers by 7. Well, he was ecstatic because I was able to sit down with him and do a calculation. No other financial organization would have ever done that calculation for him. No way would Edward Jones ever do that. No way would his banker, his accountant, or his attorney ever done that calculation for him. Most Primerica agents could do it. But this office, you're going to learn this because that, to me, if you can't, the client cannot hit a target if they can't see the target. And our job is to show them what the target is and how to hit the target. And I showed him that he's making pretty good money. His salary is about 110 grand a year. He's an engineer, and he only needs $3,000 or $4,000 a month to live off of. He's single, and so but between what he's putting in his 401k and what he's going to put in a Roth IRA with me, and the money he's already got in the 401k. By the time he's 70, he'll have the money to retire. But up until then, he didn't think he could. The money we get paid is just extra. It's what a change we can make in people's lives if you do it right. That's what this is all about. And this is why I couldn't do anything else. All the mutual companies like Invesco, they said, if you ever want to become a wholesaler for us, we'll hire you. And I could do great. I guarantee you, if I had an area as a wholesaler with Invesco, I have the top producing in here. If I screw up, I screw up. And I pay the price. If I win, I win. And I've won more than I've screwed up. That's what I like.
I worked for the man for 29 years, Delta. Since that time, you're just a number working for the corporation. They had layoffs. I almost got laid off, but I just.
And I remember you calling me.
Guy behind me. This was before you.
Oh, there was another one though.
Yeah, this was another one. So guys behind me got laid off, and they had a big, huge layoff process because you're just a number. No matter how hard you work, you're just a number. They put a line in the sand. Then during that period of time, I was like, well, I need to prepare myself for if this ever does happen. So I started going to college. So I figured I could get into management. Well, then they came a couple of years later and were top management, top heavy, and laid off a whole bunch of managers. So you work your butt off to get up to management, and then they lay off managers. So I'm like, well, this isn't going to work. So I want to do something that I think is kind of cool, which was investing. So I went and looked at the Edward Joneses. I looked at all these different companies. They all wanted me to had to quit Delta, come to work for them. And I'm like, no. And I talked to a guy who introduced me to Eric. Eric said, yeah, come on down here part-time. You can work part-time. And so I did. I came down here, 15 years ago, I want to say. Came down here, started doing this thing. The only downfall I had was I busted my ass at Delta, working 10-hour days. When I came home, the last thing I wanted to do was go to somebody's house and sit down with them and talk about finances. I did, here and there. I kept it, did it part-time and things like that. But that was, you can't get fired unless you rip somebody off and go to jail, Because I've seen layoffs, I've seen cutbacks, I've seen pay raises, pay cuts, people crying because they're losing their jobs and stuff like that. And this opportunity has none of it. If I would have worked my 8 to 10 hours that I worked at Delta, if I would have done that towards my Primerica business, man, I'd be better than him. But because I worked so hard in a corporation, giving them my whole worth, just so I can get $2,100 a month in retirement, which is offset by Social Security, so in 2 years I lose over half of it.
Yeah, that's the way the Delta pension works.
Yeah.
It's offset by Social Security.
So working for the man for 29 years, and that's what I've done. And so you got to think about yourself. That's one thing I mentioned to you. If you have to work second shift or third shift, the last thing when you get home is you want to go to sleep. The last thing you want to do is go see clients. So that will slow your capabilities of businesses down, of growing your business here and making the money that you can make. I mean, look at Will. He doesn't do anything but sits here and pulls in a $3,000, $2,000 check for doing a mortgage. One freaking mortgage. I mean, how easy is that?
When he's sitting at his house, he's sitting at his house the whole time.
I said, you get paid the same as everybody else, whether you work or not.
Right.
The thing I learned at this company is how to take care of myself too. You know what I'm saying? Well, I wouldn't be able to do what I'm doing now had I not learned it from here.
Right.
That's a fact.
So it helps you not mess up your own finances. You'll have a good clue of what to do with your own money for the rest of your life. And if you're smart, you'll teach your family this stuff. And then, but if you teach your clients this stuff, there's business everywhere. And you got to realize, even at a district level, what's the commission pay out of district? What percent is it? 35%? If you have a securities license, every $100,000 you get, you're making $1,500. How long did it take you to do a $100,000 trade, Sam?
20 minutes.
20 minutes. How much is that an hour? He still probably made $100 an hour. How many jobs are you going to find that are going to start you off at $100 an hour? You have to be willing to go through the pain to change. It takes a while for your brain to even know that you're worth what you're getting paid. You will not work hard enough to make money if you don't believe you're worth the money you're making. You will not. If you don't think you're worth $250,000 a year, you will never make $250,000 a year. That's why you hear of athletes and all these people that make big money at some point in their lifetime that are now broke. It's because when they look in the mirror, they don't see the person worth what they have. So they find their way back to poverty. If you got all the money in the world and you get spread it out, all the money equally among everybody, in 5 years, it would be exactly the same spot we're in.
Mm-hmm. Yeah.
Because the poor people would find their way back to poor, right? Back to poverty.
Yeah.
Okay? And the wealthy people would be wealthy again. Why? Because number one, they know how to handle money, and it's in their mentality, what they think they're worth, right? And that's what it's all about. And that's why you have to go through years of training, years of seeing clients. It's not just you learning this stuff. It's you teaching yourself that you're worth what you're capable of making. Why do you think Primerica sends us on these trips? Why do you think Primerica put me and my wife, doing this 32 years, next to a young couple at breakfast that have been in this business a couple of years, that won their first trip? Why do you think that they put us right next to them? I guarantee you they do that on purpose.
Right.
It's not an accident that they put these little teeny boppers next to us, and they can see that we're nothing. Number one, that we're not anything special. We don't look down on them. We're as excited that they won the trip as we are. We're willing to give them advice, tell them how to do stuff to improve their business, right? Which is not the same. Let me tell you, in most organizations, the successful people don't want to talk to not successful people. But in this organization, they encourage you. So there's a lot of good things about this, but there's no way you're going to find yourself, if you like mediocre, it's not hard to be mediocre. But if you want to be more than mediocre, and you want to have a career where you do more than just show for a paycheck, and you want to change, really have a positive effect on the world, that's another thing. When they tamped the top of my face with that show for the last time, I want to know that I made a difference while I was here. It's important to me, more than anything. But not everybody's wired like that. Not most people don't have the ethic to work ethic, and that's the key part. If you're not willing to work hard, you will never be successful.
See, a lot of people come here, come to the classes, and then don't do anything.
Go to a handful of classes. I'm going to be your next RVP, because everybody gets excited for 2 weeks, but not many people are willing to put their head down and go to work for a long period of time to be successful. Let's put it this way. Primerica recruits roughly 100,000 people a year, and they've done this for a long time, 30 years. Why are there only 5,000 or 6,000 people making $100,000 a year? Is it because is this a ripoff? Is it a pyramid scheme that not only the people at the top have to be successful? Is that it? Is it only the people at the top can be successful? No. There's a guy right now. Who's the guy that just went over $4 million in income?
Willie Naranjo.
Yeah, Willie Naranjo He's been around, how many years has he been here? 10 years, 15 years?
Yeah, less than me. 12, 15 years, something like that.
He's been here less than 12 or 15 years. He's at $4 million in income a year. That's how much he's making in a year. 400 grand a month. Okay, that's what he's making. Okay, you know why? He works his tail off. But guess what? He'll probably start cruising pretty soon, and he'll probably, and his income will go from 4 million to 3 million, but he'll make 250,000 a month for the rest of his life. And he's only, how old is he? 40s?
He's probably not 40. Maybe he might be in his 40s.
He's in his 40s, and he'll make 3 million a year for the rest of his life. And most people they won't do it. And I'm not willing to work that hard. I'm willing to work hard enough to make $500,000.
Yeah.
And to me, $500,000 is fine.
He's not an innovator. He's whatever play they call from the home office. That's the play he runs. He runs it harder than anybody else.
Yeah. And I decided a long time ago, I didn't want to build a big organization. I'd rather have an organization of 20 people that are well trained, that know investments, can sit down with the client and help do their job in most offices, which I believe I have. But I feel like I'd rather have that many doing a good job, a great job, than the same thing like in martial arts. I don't try to have a big school. I like having 10, 12 students per class. Why? Because I don't think any more than that, it's hard to really do a good job. So same thing here. I'd rather have 10, 15, 20 people that really know their stuff, that when they sat down with the client, I knew they were going to do a good job for them. I'd rather have that than have 200 that are screwing it up, selling life insurance, recruiting anything way that fogs a mirror. And there's a lot of them that do it that way. Now, that's the great thing about that. The great thing about Primerica, you can run your business the way you want to run it. Okay, no one puts pressure on me to run it the way I would run it, and I don't put pressure on them to run their. You get to pick what you like and leave what you don't like. The key to being successful is you got to make yourself have appointments every single week, because if you don't, you're out of business. But most people will quit. Matter of fact, most people did quit. Well, let me tell you, in life, it's way easier to quit things. It's really easy to quit things. And if you have a history of quitting things, it even gets easier. Before I go on an appointment, I never talk about any particular investment. If you're talking to them about that before you have the appointment, you're saying too much. The key to having an appointment is saying just enough to get the appointment, and that's it. I'm not going to say anything about it. I ignored it. I heard her every time. Okay? Because I don't care about the 100 grand. I care more about sitting down with them and looking at their whole picture and figuring out how to help with all their money works for them in a particular way than it is for me to say, acknowledge the 100 grand. And I keep saying what I have to say. I talk about the important stuff, not focus on the little stuff that they keep throwing at me. Okay. Don't ever give an insurance quote to a client. You're wasting your time. Because number one, your clients think your potential client, they won't ever be your client. Yeah. But your potential client now sees you as being an insurance agent. I don't want my client ever to think of me as an insurance agent. No one likes an insurance agent. No one says, you know what, things are going tough, I need to call my insurance agent. I need my financial advisor, not my insurance agent. Right? I want them to acknowledge me as their financial advisor, not their insurance agent. So I'm not going to give them a quote. Matter of fact, I'm going to tell them what reasons we're going to try to reduce the amount of life insurance they need, or try to have them need no life insurance at all. Even though I get a $2,400 check. So I told a bunch of them when they came in for renewal on their life insurance policies, I'd say, don't you have enough money in your retirement accounts? Aren't your kids out of the house? Then you don't need any life insurance. Don't give quotes. Get appointments. Go sit down with them. Don't look at part of their stuff. Even if they have money at their 401k or with a different advisor or whatever, you need to see it all. Even if they don't plan to leave the advisor, because you can't make a good analysis without seeing everything. You got to look at the whole picture. And I would say it's like being a good doctor. Good doctor's not just going to give you pain medication. without knowing really what's wrong with him. He's a quack, right? He needs to run tests and figure out what's going on before he ever makes a recommendation. Same thing here. Our job is to find out the whole picture, what it is you're trying to accomplish, figure out what number you're trying to hit, and then show you how to do it with what you got. This business is really simple. You do the same thing over and over again. But here's the thing, and this thing I had to tell myself all the time. I've done it a million times, but to them, it's new to them, right? It's not for me. This is for them. I've had to answer this question, why do you need to know that, a million times? But there's a reason why I need to know it. And I'm going to tell them why I need to know it. And here's the other thing that you have to do, is you have to run your own race. I always like to compete. I always look around and see where I am. But I really don't focus on that much. I just put my head down and work. I'm amazed when I go on these trips how many people know me that I don't know. I'm this little RVP. I'm not a big guy. I'm not making $4 million a year. But I'm always shocked at how many people know who I am.
You're the investment guy.
I'm the investment. People say hi to me all the time, and I have no clue who they are. Just get focused, and I'm telling you, it's worth it. It's worth it.
I believe y'all.
It's worth it. It's worth it.
And you learn the most by sitting down with clients and working
Yeah.
through their problems and their F&As.
Yeah, and then the reason I do these classes on Saturdays is not for me.
Right.
The biggest thing I like for y'all to do is bring in case studies, bring in examples of things you're working on, so we can work through them together. We learn way more like this.
So like today.
So we can learn way more from case studies.